Hi guys, today's video will be about trading psychology. So how we should approach trading from our mind's perspective, how to deal with losses and wins as well, and how to overall prepare ourselves for this new, we can say, adventure, because this is how you should approach it. It will not be easy, it will not be as exciting as you might think and how other Instagram profiles are depicting it to you. Trading is a bit boring, it is a constant struggle, and if you are too emotional person, either you'll learn how to tame your emotions towards money, or you'll stop trading very quickly. That's unfortunately how it is. Each of us, sooner or later, is touched by the moment when we start to wonder if forex trading is for us at all. Such reflection usually comes after a series of losses and frustrating attempts to quickly recover the situation, which end up with another taping of the bill. Usually we act irrational, overstating the size of a position and going against all logic. You probably wonder if there's any effective method to prevent this. It seems to me that there is one way that we could take away the fate of losses from us. There were a couple of videos on this channel about the trading psychology, but today, however, I will focus on a few issues that may help to deal with the recent failures and renormalize our trading. At the outset, I would like to point out that not every example given and not every method presented must be perfectly translated into our reality. Each trading system, if it is used by a large number of people, is a unique way of making decisions, including psychological. Given this uniqueness, there is no guarantee that the aids I present you in today's video will be fully effective. However, they require a deeper analysis of your own trading, which I strongly encourage you to do. As I said a couple of seconds ago, boredom is the key. Often we can hear from the lips of earning traders that their trading is simply boring. This does not mean losing interest in markets or losing passion. It is simply detaching our emotions from the decision-making process. Trading becomes a money-making tool where loss is treated as part of the business. Percepting of trading in the forex or other financial markets as if you have a company gives us space to understand the essence of getting rid of losses quickly. Being the owner of the enterprise, we would certainly try to reduce the costs so that the potential earnings were as high as possible. So let's try to translate the same reasoning into trading. So why should trading activity be boring but at the same time interesting? Anything that evokes extreme emotions in us, enthusiasm when making profits and nervousness about losing capital, is comparable to gambling. Their task is to provide us with entertainment, unfortunately sometimes associated with recording significant losses. It's incredibly hard to get over your emotionality in trading. It accompanies us in every sphere of life and no one wants to become an emotionless robot, right? When bored with the trading and calming down all external factors, it is extremely important to acquire the ability to concentrate, which is very hard in recent times when we have so much distraction. I mean, social media and the internet in general. Every day we do not realize that the phone, messages, data, conversations with friends, partner, boss, or partners determine our mood, and not only them. For some people, it may be almost impossible to focus in an environment where something is going on around all the time. Maybe it is worth looking for a place dedicated to trading. Think about that. Is it better for you if you have your small corner when you can truly focus? Then you can compare performance. Work one day in a complete ambient environment and check your performance, the amount of tasks that you did on that day to the number of things you can do on a regular daily basis. Next thing you should think of is when it is a good time to take a break. When analyzing the series of losses, we will certainly notice a certain tendency. Orders that ended with a depletion of our account are usually concluded one after another. Am I right? I think many of you can relate to that. With some hope, if we lose on a short position, it means that we will rebound in the long position, right? Meanwhile, the market is playing another joke for us and goes deeper and deeper to the south. If it is different and the losses result from the actual adherence to the trading system, it is worth analyzing the parameters of our strategy. Win rate may prove to be a helpful tool. I'm constantly reminding of that almost in every video I make. But let's return to the topic on breaks. Perhaps this is the solution that will work for you. Stopping trading for a while will give you a moment to collect your thoughts and rest a while. To be honest, it works for me, for example. It is often the case that when trying to recover from the next recorded loss, we clean the account practically to zero, paying extra to the deposit in order to be able to conclude larger transaction and unblock as soon as possible. A withdrawal from the market at such a moment will be beneficial for both the trader and his capital. On the other hand, a fresh look at your own trade and the ability to find a potential error will only be possible when you actually look at the transactions made objectively, soberly, and without emotions, accepting reality as it is, because in reality, it is a difficult job to learn discipline, concentration, and consistency. Another things you need to eradicate is the thought, I have to be on the market. No, you don't. This is just FOMO, the fear of missing out. Trading is a chance for a reasonable profit achievement with the thoughtful means. It is neither a necessity to existence nor something to which we should be totally addicted, financially and mentally. We are not able, even from a purely physical point of view, to see every opportunity to trade at every interval. Jumping from a proverbial flower to flower, analogically from interval to interval, in search of a chance to enter a position or to reassert itself in the righteousness already contained, is a pointless, costly, and time-consuming activity. Lack of a position is also a position, sometimes more profitable than we think. A checklist can be a little remedy for such insanity. If we use one strategy for a long time, it seems to us that we know it from cover to cover. However, if we catch ourselves doing things that in earning conditions we do not do, maybe it is worth specifying our plan on a piece of paper in a few points. Not only will each transaction have to go through it, i.e. we will in fact protect ourselves against inconsistency and implementation, but we also have the excellent analytical material for potential improvements. When we sit down at the chart seeing a good opportunity to enter, we often forget about the rules that we impose on ourselves. We have this feeling that here and now it seems like a necessity to conclude a transaction and a chance to earn a lot of money on it. When recording a loss on such a position, we only begin to analyze it according to the adopted transaction system, and then it turns out that it is completely mindless and does not meet the key assumptions of the strategy. However, having in mind the list of conditions that must be met, it will certainly be easier to grasp the chaos in the form of catching every opportunity. Such a checklist also leads to a second solution, which is to create a transaction log. It is with him that trading on the Forex will become much easier and effective in the long term. It is enough to describe at least one sentence why we decided to take such a position or whether it is consistent with the assumptions. You can supplement such journal with information about the set stop loss and take profit level, profit or loss, or the assumed level of profit to risk ratio. As an example of a trader's checklist, you can write down those parameters/questions, and starting with the first one, which is the market trending or consolidating? The second one, is there a significant level of support or resistance nearby? Third one, is the trade confirmed by the indicator? Fourth one, what is the risk-reward ratio, which is one of my favorites? Fifth one, how much capital am I risking? So, the sixth one, is there any major macroeconomic information coming up that could affect the trade? And seventh, do I follow my trading plan? This will help you build confidence in trading. And you think, what else can we do to build it? Some people say profitable trading should be easy and not generate a lot of stress. However, theory and practice are two different worlds, and I know that many traders often find themselves in a state where they are emotionally trying to force a profitable trade. They try to push the price with the power of their mind, like a Jedi or some other imagined thing. Of course, this leads to mental exhaustion or frustration because that is not what trading should be. A trader who lacks confidence does not know how to approach the markets, and no matter how hard he tries, the results he will achieve will not be satisfactory for him in the long term. Beginners, on the other hand, focus on making their trades profitable at all times and believe that the more they contain, the better their chances of doing so. This is the wrong and exhaustive approach, as they are trying to control the only thing that the investors cannot control, which is the price. When you open a trade, you should focus on what you have in control over, which are entries, order placement, sticking to the rules, and self-control. Everything else is just hype and irrelevant things. It is not an investor's job to outsmart the markets. Remember, the markets are always right, no matter how great your analysis is. Now I will focus on aspects that are worth controlling in order to develop greater self-confidence. Greater confidence in yourself will positively translate into your trading results. So let's start with the biggest advantage a trader has. We decide when to enter the market and when to simply stay away from it. If you don't like what you see on the chart, don't do anything and hold back from trading. You should only enter a position when you are convinced that you have an advantage. Beginners make the mistake of believing they have to be in the market all the time. In fact, it only takes a few good trades a month to be ahead. The more you understand that you don't have to trade all the time, the better your results will be. There is one good quote: better an hour to think about your money than a week to work for it. This is where the second significant advantage comes in. Once you are in a trade, you are not stuck with it forever, and you are not a victim of what the market wants to do with you. You can close your position at any time. One theory is that you see the price moving towards your stop-loss order, so then you can not sit still, but take action and close the trade manually to minimize losses. Conversely, when you make a profit but see signs that the price is reversing, don't give away all your profits, just cash them. This is one approach which works for some traders. The whole ball has an influence on your positions. While you cannot control the outcome of the transactions, you have a great influence on how much you gain and how much you lose, and when you want the transaction to end. I'm rather a fan of setting a strict level of stop losses and take profit. I open the trade and just wait for the outcome. Therefore, later it is easier for me to analyze what is working and what isn't. But this is up to you. You need to practice both actions in order to see what works better for you. Next things to talk about are tools that match your trading style. Every investor is different, and therefore you need to find the tools that are right just for you. Some people prefer to use indicators to make their decisions. Others prefer to trade on a pure price, and some uses a combination of both. The possibilities are really big. Oscillators, moving averages, Fibonacci retracement. You should also not forget about support and resistance level, or supply and demand zones. It is also important to choose the right time interval. Some traders find that the lower timeframes are too prone to market noise. Others are in favor of these fast-moving charts. Always choose an investment horizon where you feel best and make trading decisions as you see fit just for you. There is no reason for you to trade with a method that does not fully align with your personality. As I mentioned in the beginning, maybe you are too emotional person and can't just sustain volatility. Maybe instead of quitting, let's start using 4-hour time frame or even daily. Open a trade and leave it for a day or two or more and check it once a day how it is running. And that's it. That can be your trading style. I was also talking about what can help you to achieve such a state, and I will talk about that in the next part of the video. So let's go on with the topic. Another thing is trade interpretation. Trading on the nerves with the intention of trying to get back at it and being overexcited about profitable trades are just some of the 2 reasons why traders lose far more money than necessary. Emotions and psychology play a very important role in trading. When you have a winning streak, most likely you tend to risk more in order to gain more profit from the same trades. But what is ending up happening is that you eventually lose all the profits you made and sometimes even more. Remember, however, that those emotions are just formed in your head and you are the one who activates and controls them. A loss is simply a loss. It's an inevitable part of the game, and no matter how good a trader you are, you will be losing money at certain times. The more you try to fight the losses, the worse the results can be. You should remember that even if something at the beginning generates a loss, it does not mean that the end result will be not satisfactory, and the specific strategy or plan for trading will not be able to earn. So on the other hand, there is also no reason to get excited about over-profitable trades. Profit accounting should be normal. It's very good to make money, and that's why we all play the game. But leaving your emotions aside is the best option for your wallet. You have to move on. Follow your plan and treat trading like a business. Learning trading is like growing up as an adult. You just need to deal with the reality, the problems you came across, and change things that can be controlled, which is your approach, your reaction. Not try to change the game, because it is futile. Famous quote from the person from the movie Jack Sparrow sums it up very well. The problem is not the problem itself, but the problem is your approach to the problem. So, with that good quote, I will end this part of the series. So, remember guys, if you like this video, to follow the channel and check LiteFinance on other social media like Instagram and TikTok, because I'm also posting stuff like this over there too. Apart from trading psychology, also we are talking about various strategies, various comparisons, various trading methods, analyzing the indicators, what is worth using, what is not. So yeah, if you like this kind of content, then just stick around, and I'll see you in the next one, guys. Take care, bye bye.